Are you planning to buy your first home in 2026? If so, you've probably heard people talking about loan limits. While they sound like technical jargon, these numbers are actually the keys to your home buying power. In short, they determine exactly how much money you can borrow without needing a more complex and often more expensive jumbo loan. At Maya Team Inc., we believe that informed buyers make the best decisions. As a mortgage loan originator and real estate broker, I, Rony Velasquez, along with Mona Bottros, our realtor and office manager, want to ensure you have the clearest possible picture of the financial landscape for 2026. The short answer: what are the limits for 2026? For most of the United States, including many areas in California, the baseline conforming loan limit for a single unit home in 2026 is $832,750. In high-cost areas like Los Angeles and Orange County, that limit jumps to a ceiling of $1,249,125. The FHA loan limit for 2026 follows a similar path but starts at a lower floor of $541,287 for single-unit homes in lower-cost areas, reaching the same high-cost ceiling of $1,249,125. What is a conforming loan limit? A conforming loan is a mortgage that meets, or conforms to, the funding criteria set by Fannie Mae and Freddie Mac. These are the two government-sponsored enterprises that buy mortgages from lenders, providing the liquidity needed for banks to keep lending. The Federal Housing Finance Agency, FHFA, adjusts these limits every year based on changes in the average home price in the United States. When home prices go up, the conforming limits usually go up as well, allowing buyers to keep pace with the market without being forced into jumbo loan territory. Why conforming loans matter? Lower down payments. Conventional conforming loans often allow for down payments as low as 3% for first-time buyers. Competitive rates. Because these loans are backed by Fannie and Freddie, they typically offer some of the most competitive interest rates on the market. Easier underwriting. The rules for these loans are standardized, making the underwriting, the process of verifying your financial data, more predictable. What is an FHA loan limit? FHA loans are mortgages insured by the Federal Housing Administration. They are incredibly popular with first-time home buyers because they allow for lower credit scores and a down payment of just 3.5%. Similar to conforming loans, the FHA has limits on how much they will insure. These limits are set by the Department of Housing and Urban Development, CHUD, and are usually calculated as a percentage of the conforming loan limits. The FHA advantage: credit flexibility. You can often qualify for an FHA loan with a FICO score that might be too low for a conventional loan. Gifts allowed. FHA rules are very flexible regarding using gift funds from family members for your down payment and closing costs. Assumable mortgages. FHA loans can sometimes be assumed by a future buyer, which could be a huge selling point if you decide to sell your home when interest rates are higher. 2026 loan limits, the data at a glance. Whether you are looking at a single-family home, SFR, a duplex, or a fourplex, the limits vary based on the number of units and the cost of living in your specific county. Guides 1. Conforming conventional limits for 2026. 1 unit, single family. $832,750 and $1,249,125. 2 units, duplex. $1,066,250 and $1,599,375. 3 units, triplex. $1,288,800 and $1,933,200. 4 units, fourplex. $1,601,750 and $2,402,625. 2 FHA loan limits for 2026. 1 unit, single family, $541,287, $1,249,125. 2 units, duplex, $693,050 and $1,599,375. 3 units, triplex, $837,700, $1,933,200. 4 units, fourplex, $1,041,125 and $2,402,625. Note: in California, many coastal counties are considered high cost, meaning you can use the higher ceiling limits to purchase your home. How does this affect first-time buyers? If you're a first-time buyer in a market like California, these 2026 limits are excellent news. Higher limits mean you can shop for a home in a higher price bracket while still taking advantage of the low down payment programs offered by FHA and conventional financing. Avoiding the jumbo trap. Higher down payments, usually 10% to 20%. Higher credit scores, often 700 to 720 or more. More reserves. You may need to show several months of mortgage payments in your savings account after the deal closes. By staying within the conforming or FHA limits, you keep your entry costs lower and your approval process smoother. Technical jargon, words you need to know. As your professional consultants, we want you to speak the language of lending. Here are 3 terms you will hear often during your application. FICO. This is your credit score. For the best rates in 2026, aim for a score above 740, though FHA accepts scores much lower. DTI, debt to income ratio. This is the percentage of your gross monthly income that goes toward paying debts. Most programs prefer this to be under 43 to 45%, though some exceptions go higher. Underwriting, this is the behind-the-scenes part of the loan process where a specialist verifies your income, assets, and credit to give the final thumbs up on your loan. Your 2026 pre-qualification checklist. Before you start touring homes with Mona or sitting down for a loan strategy session with me, use this checklist to see if you're ready. Check your credit. Are there any errors? Get your FICO score as healthy as possible. Save your documents. You will need your last 2 years of tax returns, W-2s, and 2 months of bank statements. Calculate your down payment. Even with a 3% or 3.5% down payment, remember to budget for closing costs. Usually 2 to 3% of the purchase price. Know your county. Loan limits are county specific. A home in Riverside may have a different limit than a home in Los Angeles. Get a pre-approval. Don't just guess what you can afford. A formal pre-approval letter is required to make any serious offer in today's market. How Maya Team Inc. can help. Navigating the shift in loan limits can be confusing, but you don't have to do it alone. Whether you're looking for an investment property or your very first family home, we provide the educational resources and expert guidance to help you win. Rony Velasquez, as your real estate and mortgage broker, brings over 22 years of experience and 3,000 plus closed transactions to the table. Mona Bottros, our realtor and office manager, ensures every detail of your transaction is handled with the highest level of professionalism. Contact us today. Ready to find out exactly how much you can qualify for under the new 2026 limits? Reach out to us through any of the methods below. Contact us through our website for a personalized consultation. Follow us for daily updates on the real estate market and mortgage tips. We look forward to helping you achieve your homeownership goals in 2026. Rony Velasquez, real estate and mortgage broker, realtor and mortgage loan originator. Mona Bottros, realtor and office manager.